Recording. All right. So this is all regarding the trading. I'm just trying to give information because there's so many people on the internet right now that are lying. All these gurus, all these influencers, and all they're doing is just pretty much making money from your ignorance because people don't research, people don't read books. They just listen to somebody who creates a picture, a fantasy for them, and they believe that, okay, this is my way, this is my avenue. Especially if you don't have money, if you don't come from money, you're trying to figure it out, you're gonna get sucked in and thinking that, okay, I can day trade, and this is gonna help me make money. And it's true, you will make money, right? But overall, day trading, the brokers, especially specifically for Forex, they are the house. And if you know anything about betting, gambling, the house always wins, right? That's just the truth. Of course, there's going to be the 1% or the 0.1% that find a way to beat the house, but for the average person that's watching this, doesn't mean that you are average. The probabilities of you being that 0.1% is very, very slim. But that doesn't mean that you cannot win in this game. So let's talk about it real quick. So day trading is literally like playing a game of roulette, right? But you're on the outside of the table. You literally have black, and you could bet black or red, and it's a 50% chance, right? 50% chance, 50% chance that you could get either one, right? Hypothetically, if we just keep flipping it heads and tails, or we keep spinning the wheel, over and over again, 50% chance. The reality of like how it really the data really will play out is most likely going to be like somewhere like 48 52 or something like that, or 47 um 53. And most people are just hoping that they're on this side. So what do most gurus and everybody tells you, right? They tell you risk management. This is bad typing, bad whatever. Risk management is true, right? Risk management is true. You don't want to put all your eggs in a basket. The foundations, the fundamentals of risk management is true, but the reality of the game that you're playing by day trading every single day is that you are going to lose. So it doesn't matter. And then once we include the fact that you're really not making profit, especially if you live off trading. Like let's start over, right? Let's say you have 1,000, you have 1K that you put into a trading account. You have a positive equity curve, meaning that you go up. Can't really see it behind my camera. So now your account, you have a balance of 2K. You have a balance of 2K. You take out your initial investment. So someone's going to say, "Oh, I profited 1K." And now your balance is at 1,000. But really, you're just starting over. You broke even honestly with this. This isn't profit, right? You just broke even because you made your investment back and you just put it back into your bank account. You're not in profit until you take this 1K again and you increase it to like another 2,000. Now you're in profit. But the problem with that is that when you withdraw from your account, you're going to push yourself to break even much faster than if you just let the account grow. But that's the fallacy that a lot of people teach when it comes to trading, is that trading is meant for you to turn this into an income. It's meant to be an income. And when you look at the hedge funds, right? You look at hedge funds, you look at other institutions that are trading, right? They get paid in fees, right? So they already have a base salary. They're not living off I mean, of course they have to grow the money, so you technically can say that they are living off of it in a sense, but they already have some type of fee. Or if they work for Goldman Sachs or something like that, they already have a salary. They're not living off of their trading account. And that's the fallacy that a lot of people end up having to deal with, and it leaves them just break even or even losing too much money faster. So let's go on into the next topic, right? Which is just directional trading. Directional trading is just pretty much what we talked about before. It's like if you're doing black versus red, right? Black versus red on the let's move this, move my camera out the way. It's like black, picking black versus red, right? Pretty much is it either is going up, is the asset class going up or is it going down? And this is just like picking the money line on a football game or a basketball game. Like, oh, is the Warriors gonna beat the Celtics? Like, and the reality is that trading is not necessarily binary. The results, right? The results are binary, right? And binary just means win loss, like 1-0. That's what binary means. If anyone doesn't know what that means, um, but the asset class isn't, right. So an asset is just something that holds some type of value to investors or to other people. And an asset can either appreciate, which means its value goes up, or depreciate, which means its value goes down, right? And just because an asset is appreciating or depreciating, it doesn't make the asset a winner or loser, because again, trading is not binary, right? Because depending on if an asset is going up or going down, all it is providing an opportunity as an investor to capitalize off the asset's worth. So, in simple terms, pretty much it's just, all right, simple terms, if we have, okay, let's just say we have, let me draw something. We have a skateboard and it's a regular skateboard, right? And the asset is going to, a regular skateboard, like over time, like if a lot of people are producing skateboards, the price of it is gonna just go down, right? Does it mean skateboards are worthless? No. I mean they're worth to other people maybe going down. But let's say we had like Tony Hawk Tony Hawk signs this skateboard and you buy it. Now it's the same skateboard, but now the asset of it the asset or the appreciate it's appreciating in value because now because Tony Hawk signed it or whatever pro skater signed it, it's gonna make it worthwhile. So if you are an investor, right? Let's even take the trading out of it. Like if you're an investor, the skateboard without Tony Hawk's signature, if you bought a hundred of them, you bought 100 of them, right? And each of them are selling for let's say $20. Like this is real cheap. I'm just example. Eventually, that price is going to go down. It might go all the way down to $15. That $100 that you spent times the 20, so what? Like what is it? 2K is not gonna it's only gonna be worth 1.5, right? So it depreciated. So you buying this asset, which is not it wasn't worth it. Um, it wasn't worth it, and it just ended up wasting your time because now the asset depreciated. But let's say if you bought 100 of those Tony Hawk ones, right, and you bought them at $20, and then he signed all 100 of them. Now that 20 would grow, let's say, into now they're worth $40. So the 2K that you spent is now worth 4K. So just from an investment standpoint, you have to understand this when it comes to trading and understand that things are not binary. Things are not, oh, this is going down, I sell. This is going up, I buy. It's it's all up to you to make that decision yourself to figure out how do I capitalize off of this. The results of whether you win or lose, like the money you gain or your P&L is binary, but the actual trading is not. So you don't just pick a direction because you could look at this market and be like, "Oh, well, the value of skateboards in general are going down, so I'm gonna just sell skateboards." And you're selling skateboards, but then out of nowhere some pro skater comes back in and picks it back up, and now you just been selling an asset, directionally selling an asset based off a binary view, but the value can still go up because there's other things at play. So this is just a small way to start thinking about investing, start thinking about um, trading beyond just, oh, I look like it's going down, I'm gonna sell. Oh, it look like it's going up, I'm gonna buy. So let's erase all this. Let's go to the next one, right? So the guru to course pipeline, like this shit is actually like this is really real, right? This is like really real. I don't really like it, but this is the truth. Nowadays it's just really easy to fake things. It's really easy to do stuff. So let's just talk about how this looks like in real life. Like, and I'm not. This is educational purposes only. I'm not trying to get y'all to do this. I know some people are gonna look at this and go do this. So you go borrow somebody's CC, or if you're, you just work, you have a good credit score, you have a high limit, you have, let's say you have 10K limit, right? You can go long stay at Airbnb. So let's do something like, let's go to like Airbnb. Um, what's the place? Let's go to Atlanta. Let's do Atlanta. Airbnb Atlanta. And you literally could just you could long stay. Like let's just say I want to be there from the 12th until I want to be there until middle of whatever. You can't really see it on my screen. It's gonna pull up some stuff, but it's basically literally long stays. So I'm gonna filter it. Let me filter it because I want to do the entire home. Show it entire home one guest. Yo, I get a condo. I get a condo for 2K for 1 month, right? 2.7K. You can't really see it over here, but let me see. This seems pretty nice. I don't need the translation. Condo, entire condo in Atlanta, Georgia, 2.7 bands, right? So I got 10K, 10K, 10K CC. This is what people are doing. Like maybe not exactly, but I'm just telling y'all. So now we got, let's say 3K for B&B. So now we're at seven. We're at 7K. Um, now we rent a vehicle. So let's go to Turo. Turo, Atlanta. Let's go Turo, Atlanta. And we're not gonna rent the car for the whole month. We might rent it for a day to make content. So let's just what's a fancy car? We can go probably do something. Let's do exotic luxury. All right, we want the Hurricane, right? For the weekend. Okay, this is Los Angeles, but fuck it. Um, I don't know why it's showing me Los Angeles when I put Atlanta. Let's put Atlanta, Atlanta, Georgia. Filters. Um, Lamborghini. Where's the Lamborghini at? Lamborghini. Boom. Let's view results. Oh, okay. Everybody likes the Lamborghini Urises. They like the trucks. I don't really like the trucks. Okay, 693 for three day discount. Um, it's two band. Now we got two bands for 3 days. And we don't even have to do 3 days. This is 3 days if we wanna make it look nice. And if you're smart, they probably could end up doing like a lease where you just put down like 4K or something like that, and now you every month you might be paying like $700, $800 or $1,000. Leases are different depending on your credit, depending on who you're getting it from. But let's just keep it going. So you got the long stay Airbnb and you rented the vehicle. The vehicle was what? Vehicle was 2K. So vehicles 2K. Where am I at? Vehicles 2K. So now we're down to $5,000, right? Now you go hire a videographer. Videographer, you can go find somebody that's cheap. They're cheap. They're not going to pay good money for a videographer. They're going to probably make like point 0.5, so $500. So now we're down to 4.5K, and this is all off the CC. This is all off the CC. So of course you have to pay this money back, but you have a whole image. You have a nice ass condo. You have the entire place to yourself. You have a Lamborghini Urus for you to shoot content, right? And all you could literally pick those 3 days. Let's go to the mall. Let's spend like $1,000 at the mall, right? And if you want to, you can go online, order fakes, and get all the Chrome Hearts, all the Yeezys, all the Jordans, all that you want under a band by just going to like Panda Buy and all these different places. It comes there by the time you're ready to. It comes to the address when where you're ready, wherever you're gonna be at. Now you're at 3K. So your investment probably was around, let's say 7K investment. You have the editor make the content for you. let's do another 500. So point 0.5. So now you're at 2.5k. 2.5k off the CC. 2.5k left. You're gonna use that to go live. You might take some, do a cash advance, take some out, and put it into a trading account, right? Or whatever you're gonna do. And now you're literally prepared to create content, even if you want to pay for promo if you want to, and create a course, sell a course. Like you literally you have everything you need. You have the Airbnb, you have the vehicle for the content. You can get lucky. Like I said, it's 50-50. You can have one big trade, you wait for NFP, and you just buy. You have two. You can literally do two accounts. Like that's a crazy thing. So it's like everybody talks about NFP, right? Non-farm payrolls. Let's go back to the example of where you literally have the roulette board is either black or red. Boom, boom, boom. It's really like, and it's really like the brokers. Of course, some brokers could like blacklist you for doing this, but NFP comes right. You have $1,000. You have a 1K account here. You have a 1K account here. Red means it's gonna sell. Black means it's gonna buy. NFP comes. It's you're on gold. You max leverage the buy. You max leverage to sell on separate accounts. This account gets burnt because on NFP it sells, right? And you bought. Now this account is in the negative. Margin called you, so margin called you. Let's say you owe them negative $500, like because it just went past whatever equity you have. You owe the broker 500, broker A $500, and then for broker B, hold on, for broker B, now you have your plus 5K. Let's just say something crazy because you just lot it up, and then all you did you also you spam bought all the way through because you're just like, all right, fuck it, I'm gonna just this shit gonna run up. You spam buy, this shit runs up, and now this account doesn't matter anymore. This account is your results. You just produce results. You go make it look like you could pay somebody on Fiverr to make it look, Photoshop the account to make it look like it's real, whatever the case may be. Or this is your real results, and now you're like, yo, I just made 5K this Friday, blah 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 blah, and you actually did make the five. You actually did make the 5K. You go take all of this, you go throw it on your course, go throw it on the internet. Now, boom, you're a guru. You already made the 5K. Remember, we spent 7.5 for the look, right? And then we spent 2K to burn the accounts. So we were down. So now we were down to $500 left on the CC. We just made 5K back. So now we're at 5.5, and then we're gonna make our course high ticket. So we're gonna make it 14.99. You know, because at 99, it's just there's something about that. All we need is 10 people to buy it. 10 people buy the course, and it's gonna just be nothing but price action shit, price action and psychology, price action and psychology. So we'll just round it up. 1.5 times 10. That's 15K. 15K plus so now we have five plus the 5.5 that we have left. Well, we'll just say five. We won't even include the 500 um that's left on the CC. So now you have 15. No, now you have 20K, right? And on the CC we owed 9.5. So let's take the 9.5 off the CC. Sorry, my face keeps getting away. Let's take the 9.5 off the 9.5 off the CC. So we have uh 10.5K in profit. And that's only if 10 people bought the course. You don't have to trade anymore. You don't have to trade anymore. Or you could do the same thing and just burn the next account. wait for NFP, wait for some major news, you know, uh, spoof your KYC. If the broker even requires you to do KYC, do this shit again. You could literally scam like this. People literally scam like this where they go take you can go take someone else's details, go set it up. Of course, you have things now to stop that, but that's really the playbook, and that's what a lot of people are doing. And to be honest with you guys, a lot of people don't want to be truthful about what they're doing because it's going to stop their money, stop them from making their money. And that's really like what's happening where these people are becoming gurus, becoming these, oh my God, I'm the best trader in the world. And they're lying to you, they're lying to your face. And after the play works one time, where they take the CC, rent the lifestyle, fake, not even either fake the results or really get results, but all they're doing is just hedging. They're waiting for NFP or something big to just split, basically roulette, play the broker game, fuck over one broker pays out if they do pay out. Even if they don't pay out, they have the results that they can show you, and boom, go on the internet, promote it, TikTok, take some of that extra bread and do it again. Oh, now I have 10K left. I could do this shit again. And this time I'm gonna amp it up. Now instead of the euros, I'm gonna go buy this. Don't get me wrong. Some of these people do own these things, right? Or they lease them. But there's just a vast majority of people that just make their money off of just selling to other people and having their courses, mentorships, or even I forgot the other product line that they have, which is uh like selling signals. That's the other one. People sell signals. So it's just a lot of bullshit that's happening like in the trading space, and the reality is like you have to know who you are, you have to know what you're doing, and you have to understand like that this is the game that these people are going to play, and they don't give a damn about you. They don't care about you. They're going to do what they want to do to um make their money. That's how this shit goes. So the next thing is the broker money, and this is how we're gonna get further into the guru to course pipeline, right? So the broker money. So broker money is pretty much like I have all of this stuff here. If you really want to see it, just read it real quick, just so you can see it. Um, I can't spell, so I'm gonna leave that as is. So let's just walk through it real quick. So a lot of traders, that are influencers in the space, they make more money from courses, affiliate links, and broker fees than they actually do from trading. So the reality is like, if someone knows how to make a bunch of money trading, why the hell would they tell you? Literally, the best companies, hedge funds, institutes in the world, all of their stuff is proprietary, meaning like it's not to be shared. It's not to be shared on the internet. It's not to be shared with other people because it's literally responsible for them to making money. And if other people copy it, it's going to dilute it, and then after that, the method or the system or the technology or the algo, whatever it is, it becomes useless because everybody's using it. That's just how this game works. And if the best in the world are not giving out their information, why do you think the individual will give out their information? So the last thing that's I'm going to touch on really, which is the whole thing is about the whole broker money thing, is that basically you're when you have a white label broker or you get a bunch of money from affiliate links, you almost it's like playing like with an infinite bankroll or playing with the house's money. So if we go back into here, right, you have influencer, yay! I have the fancy car, right? Everybody sees him. He tells you go trade with my broker. Go trade with my broker. He collects he collects commission for every trade you take. So you go on there, you listening to him. You're also in his signals chat. That's another thing. You're in the signals chat every single day. Every single day, there's not a move on the market, especially for Forex, especially for like indices. There's not a move every single day, but damn near every single day in a single chat, a signals chat, they're gonna give you a move. Why? Because if you go take the trade, whether you win or lose, they are gonna get they're gonna get a commission from that trade. So if they're sending you 10 signals a day and you're putting one lots in there, right? Who knows what the kickback is? All right, it could be small. It could be like, oh, they're getting $10 per lot size. But if you have 500 people in your signals chat and they all take those 10 trades that you have, boom, that's 5 bands. This is me just making up numbers. This is not the reality because the affiliate links, it could be different. It could be they get a certain amount of money for how many people they sign up. They get bonuses. It doesn't matter. Basically, you're just a salesperson. That's all it really is. You're just a salesperson. So that's 5K in commissions, and that's not including whatever fee that you may pay for the signals chat. That money goes back into them. It pays for their lifestyle. Pays for their lifestyle. They use that money to trade if they want to. So let's talk about the other aspect of it, which is you have again the influencer. You have you. Let's put you, circle it, put INF for influencer. You see them, they have the life, but they have a little bit more money than the regular guru, or they've been running the play longer than somebody else. So now the broker is actually them. They are the broker. So now they're getting more money from the fees that they collect, compared to the person when they were just an affiliate. So now they're the broker. They are the house. You go to them, they tell you go trade with them. They collect the brokerage fees, they white label it. It might cost them 60K to white label the broker. And now this is theirs. This is their asset. Everybody comes through, they trade through this broker, and then they get all the fees. And the brokerage fees, you could be getting like 400 to 2 million a year, just off the fees. This is going to them. Now you're making 400K, 2 M's a year. You don't have to trade. And then we go right back to the roulette table. NFP, 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 right? And now I'm the broker, so I'm the broker now. So it doesn't fuck. And if I burn my account, I'm not hurting anyone but me. I'm not hurting anyone but myself because I make account A with the money from my brokerage fee, and I make account B. You have account A, you have account B. NFP comes. Oh, I'm gonna just buy one account. NFP comes on other one. I'm just gonna sell. It's my broker. I'm gonna owe myself money. But now, oh, I have $200,000 to play with. Boom. Oh, this time NFP buys. This account is burned. This account wins. Boom. Oh, I just made $80,000 in 10 minutes. Now their lifestyle gets super amplified. Everybody's going crazy. Oh my God, this person made X amount of dollars, but they're not a real trader. They're not even an investor. They're just a guru selling you a lifestyle. And now the broker fees is helping them grow their bankroll. It doesn't matter whether they win or lose because even if they it did have one account and they played bet it all on black and they lost it, you're going to be still trading and you're going to provide them the money, the income, so then they could just do it again. They're not losing this money and being totally devastated, being wiped out like some people really are. They're not. That's not what's happening. They're literally making their money and continuing to go on about their lives. That's just the reality. That's what's happening. So let's talk about the edge. Shit, this one got real long. So this basically says what's my edge? Let me zoom out a little bit. What's my edge? So to be honest with you guys, I don't have an edge. I don't have an edge yet. Um, I've gotten good at price action because I've gone through that whole. It's a smoothie, by the way. I've gone through that whole of just just looking learning from other people, right? I've learned from other people, and now I'm at a point in my life where okay, I understand what trading is, I understand what trading isn't, and the things that I've learned have helped me in a way. Like knowing price action is very helpful when it comes to your entries, when it comes to taking action on your research. But there's more to that. Like now, I don't really just sit. I don't sit on the charts anymore. I used to back test. I used to sit there and just look at stuff. Like back testing, just looking at the charts is really just for pattern recognition. And it's cool, but it's like at the same time, it's randomized. Like swing trading is better than trading on lower time frames. But to be honest with you guys, I don't have my full edge, but I do have a system, and this is just part of it. Most of my system now just comes down to just research, and looking through, when I'm looking, research is really just me going out and just finding publicly available data, comparing companies to each other, seeing what's happening to the industries, using my own internal research of like, okay, like looking at things on Reddit, looking what people are saying, their opinions, my own experience with these different products and tools. Like I have an Apple Watch on right now. It's like, okay, what's going on with Apple? Like, is it dying? Is it growing, etc. Going through, so pretty much like they put out like reports, like companies put out reports, like earning reports. You can look at, I forgot the name of it. But basically, like these, it's like it's like a sheet that just talks about like what the company is doing. Their pretty much I think there is their earnings report. You can go through that and find information that's going to teach you about what's going on with the company, and you can use that with your own other methods of research to figure out okay where do I see this company going, and then you look at stuff like macroeconomics, microeconomics for me specifically. Like you want to look for things that are leading that's going to predict what's going to happen in the market. Like if the price for chips, like let's say the price for chips are increasing, right? Let's say there's something that happened in China with some manufacturing, and it's going to cost more money to make CPU chips. What do you think is going to happen to AMD, Intel, these people that are making um, uh, their money from selling computer parts? If it goes up, right, it means their costs are going to go up, and it's going to end up causing to make CPU prices more expensive for the person on the retail side, like the retailer, the person that's buying it, like myself. If it's too expensive for a long time, what happens? People stop buying it. What could potentially happen to that stock? It could go down, or it could just slow in its growth, like it can contract. Doesn't mean that AMD is gonna immediately like plummet, but it's gonna slow in its growth. So then you got to think too, like, all right, a lot of the stuff that gets promoted to us, which is just news. News is not research. News is like a lagging indicator. Lagging because it's like by the time the new it hit the news, it's already people have already capitalized off of it. So I kept talking about NFP before, NFP, NFP. A lot of people look at NFP as a way to, oh, it's going to be a bunch of money to be made because the market is volatile at that moment. But price has already gotten there. It's already factored in to what it's worth by institutes and other investors. So by the time you arrive to the party, it's already too late for real. And they're just getting rid of their positions, or they're getting in their positions for where they want to take price. Um, and the best way I can describe that as a lagging indicator is like, yo, if you come to the party when it's the most packed, there's a chance that you might miss the moment, which is like some gonna be lit inside there, or if you arrived earlier, you have the better opportunity to experience it all. It doesn't mean that the party's going to be lit, but would you rather be the person that went to the party and you got to experience the moment, or you were the person that was outside trying to get in while the latest moment occurred? That's just the best way I can explain it. You want to look for stuff that's going to produce alpha, like good information that's going to help you make money. Um, and that leads me to my next thing, which is like Forex is just a waste of time. Like the research required to find opportunity in Forex, it's just not worth it. It's very very slow. It's a global thing. You have to look at global GDP, which which is led by the United States, China, and the Eurozones. Those are the biggest areas that contribute to GDP. You have to keep up with policies, right? And if you don't know anything about China, you don't know much about the Eurozone. You're kind of pretty much stuck to the U.S. Um, and then you have to understand foreign policies and overall the asset class just doesn't move, so it's just not worth the time. Like you're gonna put in all the time, and it's like GJ has been what like 160 to 200 or something like that over how much time whatever. Like it don't move. Like it might move like 7% over like 4 or 5 months. That's that's nothing. That's not worth my time personally. Not when there's other assets like crypto, when there's stocks that can move 12%, 40%, that can move 100% in a year. You're never gonna see. You're rarely gonna see a Forex class move 100% in a year. That's just not gonna happen unless some type of global economic crisis occurs. Next thing is just stocks, stocks and indices. Uh, there's more opportunity, pretty much more opportunity, and I won't say less research, but it's just the gains that you can get from stocks and indices are better. Um, back in the day, I think people probably still do it now. They can go talk to employees. Like you literally go on LinkedIn, make friends with somebody at a company, and figure out what the fuck is going on. Of course, like you could be forward about that, but there are people that are, you might have a friend that's a part of a company and you just talk to them and could that classify as insider trading? Possibly. I'm not telling you guys to do anything illegal. This is just educational purposes only. Sometimes you can get a hold of CEOs. CEOs, they're busy, right? But they go around, they talk about their company. A lot of times you don't want to hear what the CEO is saying, right? You want to go do research for yourself because of course, it's his job to promote the company. Oh, we're doing this amazing thing with AI technology. But then inside the company, they're telling you, yo, we have all these bugs, all these issues. We're not going to be able to launch by the date that the CEO said. That's an opportunity. Oh, well, if they're not going to hit the expectations, they're not going to beat their earnings 2, 3 months before earnings report comes out, the quarterly earning reports come out, you short the stock. Does that mean it's going to happen? They could lose against the earnings and then it still shoot up. You never know. This, like I said, is just it's trading. Like things happen, but that's just a way for you to understand. Like, okay, how can I get ahead of the game before it arrives? And then also, you don't really want to pay attention to mainstream media, anything when it comes to stocks indices. They will literally sell you down the river. Like they don't give two fucks about you. Um, there's a book called Full of Bull, and it's about analysts and how a lot of the people that are paid or they just have conflicts of interest when it comes to the stock market. So they're not going to give you the correct information that's going to actually help you produce results. They're just going to do something that's going to help their pal because these people know each other in these businesses. Like they know each other in these businesses. They are friends. Why would if my friend owns Microsoft or whatever, or my friend owns Intel, and he's a CEO of Intel. Why would I and I'm a analyst on the news? Why would I tell anybody to short my friend's company? I wouldn't do that. So you gotta just think of that. Think of the conflicts of interest every time you're researching. And then for crypto, I feel like crypto is, again, is like the closest thing to real day trading. Um, Damn, this smoothie's good. Crypto is the closest thing to real day trading, but also it's still like playing roulette. You have to you could use price action, but it's so volatile you could lose like very very quickly and then it can shoot up. Uh, I do back testing, not on a chart, but just through looking at inflows, outflows, and then like liquidity heat maps, and there's some other information that I use to just help me figure out, okay, like are we likely to stay flat? Should I be expecting a pump? Looking at wallets, are they gonna dump? Is like some type of issue building up that's gonna scare people, and if people are scared, they're gonna dump the asset class. Like just trying to find some information. Of course, like when news pops up, like oh, if a bomb goes off in a certain place, and now Americans think we're gonna be at war, it's gonna dump. I can't know that unless I'm out somewhere in the field to understand that's gonna happen. But that's pretty much how I look at the current asset classes that are available for us to trade. I don't look at oil. I don't look at all that stuff. That's just I feel like you need bigger money to make money off of that, and it's just not my forte. So the next thing is, and this is just for me. This is like leading into like hedging, right? And I feel like as a retail investor, everybody should look into learn about hedging, right? And the reason why I call this like, would you go outside naked is because that's a real question. Like most of us, like we put clothes on. None of us are gonna go outside naked and expose ourselves to the elements. Cause you go outside naked, germs are on you. People gonna look at you. They're gonna laugh at you. Um, Somebody could just hit you, stab you, whatever. You get what I'm saying? So most people are gonna answer no to this, but the reality is that this is how most people participate in the retail market. They don't they don't think about their vulnerabilities. And what does that look like? What does naked look like in trading? Which is just directional trading. It's just doing a basic call or a basic put or just, oh, I bought this asset alone. You're not protecting yourself from a loss. You put oh, I put a stop loss in. Like that's just confirming your liquidity. Like a stop loss is confirming your liquidity. It's confirming your L. Oh, I'm trading out because it didn't work out. That's not really protecting your capital because you have no protection. And um in Forex specifically, like everybody like is pushing like Forex, right? Let me put myself in the camera. In Forex, you can't hedge because the pair is the hedge. Like if I'm trading GJ, right, or Great British Pound versus the Japanese yen, that is the hedge. I'm long Great British Pound, I'm short Japanese yen. That's the hedge. You can't that's your investment is the hedge itself. And most people don't understand that. They look at the pair, but they're not understanding what's really happening, what's really at play. The next thing is just um, even with indices, like, because now I see everybody in the futures market or everybody like primarily trading Nasdaq, US 30, and because they're a little bit uh, more volatile than forex pairs. But to be honest with you, like, it's almost like a hedge too. It's not a cross pair, but it's just a indice is a culmination of many stocks. So if I go over here and let's break it down, like we have the Dow, right? The Dow has 30 stocks, right? 30 stocks. That looks like a five, but it was 30. So if we have, I say, I know Apple's in there, and I think like Apple, Disney, right? So the reason why it's almost like a hedge, or it's not really, it's not the same as like hedging on an individual stock or something like that, is because if Apple has a terrible day, right? But Disney doesn't, right? Oops, I want it to be green. But Disney doesn't, right? It's almost like the gains of the other companies can offset the losses of the other one. And that's basically what an indice is. It's literally to take a sector, right, and put it together so that way you can get the average of all the gains. Because Disney could have a terrible full year, but another stock in the Dow Jones has an amazing year, and because of that, now because of that, the indices still can be lifted up. You get what I'm saying? So that's kind of like how indices you can't really hedge against it. Like you can you can in a sense. There's ways, but just in general, like it's a large group of things. So you can't really hedge against it. You can hedge specifically, like if I want to sell options or something, like I want to sell options for the Dow 30. You can hedge against your own personal investment. But I'm specifically talking about with like derivative trading or like CFDs. You can't really hedge anything, like, and you'll see days where it's like even with the Dow where all the companies are green, like all the companies are moving up, but still people are taking profit on the down. So it doesn't necessarily line up all the time. And then lastly, proper hedging, right? Which is just like again the whole concept of just not being naked in your trades is just mitigating your losses and setting yourself up to maintain or grow your capital. Like the biggest thing is that you don't want to lose money. And examples of this, like an individual hedge, like you could be short or sell options, sell put options for Apple but then still be long the stock because you're long Apple because you know over a 10-year period Apple is going to continue to grow. But right now Apple, like we said earlier, let's say Apple is having issues with like a new Apple Watch, so you can sell your sell put options like as a way for you to make money on the way down while it's contracting, but still be long on the stock. And this is an example of like an individual or just a stock, like a stock hedge. So then you have a cross sector hedge where it's like, okay, we're in the technology sector, and I'm long Nvidia because I know people are going to continue to crypto mine, and people are going to need it for like on set for like 3D sets, 3D movies. But then I'm also short Intel, right? Because if something, let's say if tech as a sector falls or drops, the short that I have on Intel, because let's say I'm this is an example, right? This is not perfect. Let's say Intel, if it falls, it's gonna mitigate some of the loss that I would take if I was just only long on Nvidia. And then cross market is like I'm long AMD, but I'm short Bank of America. And Bank of America is like considered a defensive stock, so it may not move too much, but if something goes wrong, if something, this is probably a bad one, honestly. Like something goes wrong with tech, um, I know that finance isn't going to drop too far either. Like it's not going to drop too far, whatever the case may be. But that's probably a terrible example. But this is just cross market where Bank of America isn't necessarily tech. So oh, let's have a thing coming up. Bank of America isn't necessarily tech, so you don't have to worry about that. If the tech sector falls, the banking sector may not fall with it. This will probably be a better example if it's like if I'm long AMD and I'm also long Intel, but the whole sector falls, I'm not hedging I'm exposed to all the risk of the tech sector. That's a better way to think of it. So when you start understanding these concepts, when you start thinking about these things, it can help you protect your capital better, and it makes you think about better investing opportunities outside of Forex, outside of just the indices that they offer in the contract for difference space. So the next one is DCA. Like I kind of talk about this already, DCA and hedging. So DCA is just dollar cost averaging. So like typically when markets crash, they tell everybody, yo, just buy more, buy more, buy more. But you don't always have to just buy more while the stock is going down. You can hedge it by selling options of your stock. It just reduces your unrealized loss. It helps you. It can contribute to short-term gains, and when you do exercise those options, or you do sell them, that gives you short-term income. So if Apple is falling, like it's probably better for me to illustrate this. Let me stop using Apple. Let's say if Nvidia, let's say Tesla is going up, right? And let's just talk about in price action terms. You have a head and shoulders pattern, but then also there's a bunch of news that the Teslas are crashing. So normally you could just DCA DCA the drop, right? But also up here, let's say when you saw this shoulder being formed on a higher time frame, let's say it's like a monthly time frame, you could also begin selling, selling those put options for other people who want to derivative trade it. So instead of let's say losing 10% unrealized, right, because you didn't close a trade, now it might be negative 7%, right, because you sold some options on the way down, so you're making money off of your stock's loss. So then once it starts to recover, once it starts to recover, you actually have some more income that you can either use to DCA, which is dollar cost average, back into the stock, or to place in other investments that you want to use. So this is just a good way to think about it, because a lot of people just feel like all they can do is just buy a stock and hold it and that's it. But there are ways to hedge against losses or protect yourself, because some people it's going to be hard dealing with the drawdown or the potential losses that do occur. Um, Next one is just, can you hedge crypto? And I don't think it's possible to hedge crypto, because what I've seen so far from just monitoring it, um, if Bitcoin falls, everything falls. So it's like that whole market is literally driven by like honestly, I would say BTC is the market. Like if Bitcoin drops, everything falls. If Ethereum falls, nothing else follows it. So it's almost like you can't really hedge against that, because the alts are gonna fall. Now I think within like smaller subsets of the crypto market, you can hedge in that space. Like there's alts, like uh you could be long you could be long XRP, right? You could be long XRP, but then or short XRP, because most of the time XRP is going to run up and then come back down. You could be short XRP during its bear cycle, but long Coinbase like BNB, or long Solana. And it's like the alt space, right? A little bit different things. XRP is different than Solana, but I'm just using that as an example, like for potential hedges. But if if BTC falls, if BTC goes down, everything everything goes down. That's just the reality. So I don't think it's possible yet, but I feel like as more people participate in the market, as more technology comes into the space, there's ways to hedge it, or you might have to find outside investments to mitigate the losses that you're going to experience. But personally, I haven't found that yet. Of course, I have to do more research, because I do still believe that crypto is the last thing that you can day trade. But as far as long-term investing, the best thing you probably could do hedging wise is just to be short. Like, and I know people that do that, where it's like over this period from like March into now, some after we had that big run up of BTC to 60K, like BTC went to 60K. Let's just show it. Like BTC went up like this, and now people have just been they're just shorting it while it's moving sideways. Like it's moving sideways, and investors are shorting it, right? And they're shorting it in the derivative market, and then when it's reaching these troughs or these bottoms, they're just DCAing, like they're just adding more to their long or their spot position. So you could be short short in the derivative, and then you could be long spot, and that's like an example that I talked about with like the Apple stuff, where you could be long an asset class but then short in the meantime. So since we've been talking more about crypto, let's talk about inflows and outflows. So inflows is just money being put onto exchanges. Outflows outflows is just money being taken off of exchanges. So inflows pretty much are is a sign. It's a potential sign. It could be not necessarily a leading indicator, because it's lagging information. Like the amount of inflows flows changes each and every day. But if there's more inflows over a certain period of time, like over a longer period of time, it could show you that there's more likely a chance that people sell, because the inflow is like, let's say I have money in a cold let's say this I have this is chapstick, right? But let's say this is my cold wallet. This is my cold wallet, and I'm about to put it onto an exchange. Let's say the AirPods are the exchange. Um, I could just draw this. Let me. What the hell am I doing this? So we have cold wallet, and you have exchange, right? So exchange, there's a lot of people have access to the exchange. Tons of people have access to exchange. Only one person has access to your cold wallet. So when you take your money and you move it from a cold wallet to an exchange, you're trying to most likely sell it. So if you're selling it, if more people are moving it from a cold wallet to an exchange, that means there's a higher chance of the asset's going to sell. If there's more people taking it off their exchange and putting it into their cold wallet, then there's a higher chance that the asset is going to appreciate because it's just going to be less supply available for it. So if you're monitoring the inflows or you're monitoring the outflows or the net flow, this can be somewhat predictive of where you think it's going to go because um, let's say if we look at the bottom of like the bottom of BTC, let's say when it's around 18K, 20K, we can go check to see what the net flow was, whether it was positive or negative. And most likely at 18K, there's it's barely it literally was like one thing once it dropped under 20K, it was like at 18 between that time for 20 to 18K for a while. At a certain point, people just stop exchanging it because they just feel like, all right, I'm not making any money from this. There are less people in the derivative market as well. That's something else. But a lot of people are just putting in the cold wallet because they just like, all right, fuck it, like I'm gonna just let this do what it's gonna do. And once you start getting more and more people that are just in the cold on the cold wallets, the value is going to just shoot up because there's no more exchanges happening. So its worth is going to increase. And BTC has Bitcoin has a fixed supply or a finite supply. So it's almost like anti. Damn, it's so hard to spell with this. Inflationary. Just pretend that I could spell. It's like anti-inflationary because you can't create more BTC. So that's something that if you're into crypto, you should look into the inflows versus outflows, and you can look at that for different exchanges. For like the most of the time, they only have it for Ethereum, Bitcoin, and possibly Solana. Now, how I look at this, how I found out about this was through a website called CryptoQuant. Let's launch the app. So CryptoQuant, if we go to charts, and this is free. Like they have other assets on here, but if we look at BTC, I'm on BTC. You can't really see it too well on this. Let me move the screen. Look at BTC. Um, if we go to exchange flows, is it exchange flows? Let's see inflow. Yep. So we can look at the exchange. Let me sign in. Come on now. They over here playing with me. You can look at the inflows. Inflow, and we look here. Look at. We can literally see the inflow spike. Let's change it. So we can leave it at bar. At the end of start seeing it at the end of October, and towards the top of the year, right before we had this. Oh, this is 2023. But again, look at that bottom. We saw that the inflows went crazy, meaning people are taking it to their cold wallets. This was like almost like a leading indicator to the fact that we were nearing another bull run. And this isn't, I think, this isn't all of it, because of course Bitcoin was around before 2021, but this is what's available right now. I'm probably sure if I bought the pro version, it could show me the inflows, outflows before that. So let's look at the outflows. But this also for more on the macro because I can't look at the inflow from yesterday and be like, oh, it's gonna shoot down tomorrow. Like you could, but I'm not seeing that. Not seeing that happen data wise. So we're in 2022. Look at the outflows. Um, you have another spike here, but I wonder if they'll let me put it out on. There's a way for me to put it on the chart. Let me see. Put on the same. We put on able to put the inflows and outflows on the same chart. You could kind of see like where we have like a collection of when the outflows are decreasing. Oh, you can't even see over here. Oops. If we start seeing the outflows, start seeing the outflows uh decreasing or increasing, it could just lead to us seeing a change in investor behavior. Like you see the out right here, right leading into that bull run that we have up until March, right? We start seeing the outflows increasing, so then what happens? The market starts moving sideways, and that just means more people are just putting it on the exchange because now they're trying to sell their Bitcoin. Like you just got to think of it like if the price just rallied crazy, if it rallied from 40K to 70K, people are going to take the opportunity to sell their Bitcoin, cash in, take profit. That's another way to think of it. I know I made it really complicated, but I'm still learning, I'm still learning myself. I'm still learning how to figure this out, but this is something that is worth looking at. So crypto quant is a good space to go to. BuyedFi, this is just a place for me to where I'm learning to trade crypto as an asset class. I have over 210 crypto assets. I do not have an affiliate link where you can spot or derivative trade using USDT, which is the tether, or I think there's you could send other you could send coins to your wallet on this. It doesn't have the best user experience and user interface, but it's just better. You have more assets to trade compared to other platforms, and the fees are 10 times better. You can leverage. You can leverage up to 200 out 200 times leverage. I don't recommend that. You will get liquidated very quickly. But you do have the option to isolate or use cross leverage. Isolated leverage is just like if I want to do 50 times leverage trade, 50 times leverage buy. Um, on Solana, it won't take money or margin from my wallet. It will only just take the margin that I put up uh for that isolated Solana trade versus cross leverage is like it could you basically can use some of your margin or excess or capital across your portfolio, and that's pretty much it about BuyFi. The last one, damn, I had this shit here for mad long. The last one is not the last one. This concept is just about liquidity, right? And this is more so about the news and how the news will lie to you. It's honestly the news's job to lie to you because it's hard for them to catch them. It's hard for you to catch them in the lie, but they do lie, and it's because they're trying to get you. They have an agenda. They want to get views. They want to get attention, and they want you to make bad decisions. Um, so pretty much the news is meant to drive fear and mania, which leads to either massive buying or massive selling. And it is from the opposite end, the people who don't pay attention to the news, the people who go and do their own research and figure out what they are trying to do, it gives them the opportunities to get in and out of large positions. Like if we go back to the whole the BTC Bitcoin going from 40 to 60K, and then we saw the outflows increase where more people are putting their money on exchange. Um, some of that is just like, yo, people online go, oh my God, Bitcoin. Like, so you have people that's like, oh, moving their money because they're trying to participate in the market, whether they're trying to buy it, they're trying to or sell their Bitcoin. Like they just want to get in and cash on an opportunity because all these news outlets, people, influencers, shilling crypto, shilling different things, are persuading them to make bad uninformed decisions. And then guess what happens? You become the liquidity because you're the person that came in and you decided to buy Bitcoin at $65,000 because everybody's telling you Bitcoin is going to 100K, and you bought in March at the top of it, and now it's moving sideways, and you just been sitting there. wondering why hasn't the asset class moved? Why isn't it at 100K? And the people are just taking profit, and you're just a liquidity for them because you're going to be the one to buy it. You're going to be the one to catch the falling knife. You're going to be the one to have a stop loss. You're going to be the one to sell your position because you bought at all-time highs, and now you don't know why the asset class is moving, but you just know that some guru online told you to buy it, and you didn't go make that decision for yourself, or somebody on Kramer told you to go do it, and you just did it, and that's what happens. And now you're the liquidity. You're the reason why people are able to get out of their position, get in their position. Institutes are able to scare you. They're able to dump dump their own assets, and then to drive the price down, to drive fear, so people are scared and they're selling their assets, and then they just buy it all back up. So you don't want to be the liquidity and all. In reality, we all are liquidity in some cases. You're going to be the uninformed investor. You're going to be the person that um, takes the L or gets in and out of position based off of fear. But the reality is, like, again, like, stop trusting the news. The news is always a lagging indicator. The news is meant to drive fear or mania, and is meant to make you an emotional person, not an investor. So the crypto boom and bust cycle, I kind of talked about that. I just talked about that in a sense where people always come late to the party. One major headline will lead to people buying at all-time highs. Like, people been knew about Nvidia. People been knew about um, like, just different things that have been moving recently. But it's like as soon as it goes on MSNB or CNBC or CNN or whatever, any company or media outlet that covers some type of financial news, people go invest into it, or they go here like, oh my God, like like the biggest thing that was annoying, and I know I'm supposed to be talking about crypto, but the annoying thing is like, oh, Warren Buffett sold 50% of his Apple stock. Warren Buffett has been invested in Apple for mad long. Warren Buffett decides to take profit. Now all the headlines go talk about it. All the Twitter pages, all the Threads pages goes and talk about it. And then people get afraid and think that, oh my God, the economy is dying. It's terrible. Uh, Can't you just take profit on a trade? Can't you, like, why if I know Apple is going to be contracting, or the tech sector as in itself is heading into a bubble because of all this AI shit, why wouldn't I take out some of my money and move it to another place, or just protect my capital? But what happens? People hear, oh, Warren Buffett sold 50% of his Apple stock. They go pull their investments. They go do stupid stuff that's not aligned with who they are, aligned with what they need to be doing. And now you're just sitting there with a loss on your hand, because you might have been the person that bought the Apple stock 2 years ago, and it's moved 9% against you, but you saw that Warren Buffett sold it, so you're going to sell it too. And that's the same thing that happens with crypto, where when crypto is in a bear market, it's just going down, 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 down. The average investor is not paying attention to it. The smarter investor, or the person that watches it through this bear cycle, they're looking at it as dollar cost average, dollar cost average, dollar cost average. Let me buy more, let me own more. When it finally takes off, because now, there's an imbalance in the inflows to the inflows versus outflows. More people are storing it in their in the cold wallets. They're not having it on exchanges because they're just like, yo, I'm holding this. Price goes up. Some type of news comes behind it. Some institute gets behind it. It goes even crazier. And now you're seeing, oh my God, this just pumped 1,000%. Here comes the average investor. Oh my God, I just moved up 1,000%. I'm in there now. And then they dump on you, and begins the bust cycle, because all the people that bought while it was dropping down, they're taking profit, and you're the one that's buying buying the asset at a premium when they were buying it at a discount. And then you're left sitting there bleeding, or you got to hold until the next pump. And most people are not ready for that, because you might do something stupid where you put your life in savings into Solana, and Solana was at 180 and it dropped to 120 in a flash crash like 2 weeks ago. And now you just watch your 10K investment go down to like 4K in a matter of 4 hours. You're gonna sell all your stuff, and then boom, it's too late. And now you're mad and then you go tell everybody crypto is a scam, but really you don't even know. You just don't know where you are in the cycle. And to summarize this long video, this long chat just about um, just investing and trading specifically, is day trading real? And to be honest with you, for majority of asset classes, day trading is not real. It's not a thing. I feel like it used to be before like computers really took off and um, you have a bunch of like supercomputers like quants. I think day trading was a real thing, but now it's not. I think crypto is really the last place, and it's really more so in the alt space because institutes are now participating in crypto specifically for like the majors like Bitcoin, Ethereum, and then now even Solana may end up having an ETF. Like I feel like once the institutes get a hold of it, you can't really they're eating away all the any possibility that you can get on a daily basis. But I feel like crypto is the last asset. Forex, you cannot day trade that. You day trade that, that's just a waste of time. Um, Indices, waste of time. It's just more volatile. You can do it, but it's just like going back to the roulette table. Price action is random noise, it takes months, sometimes years, for an asset class to truly show its worth. And that's why swinging is the best way to see true gains, at least now in the world that we are living in. But again, crypto is extremely volatile, and there are tons of opportunities every day because there's tons and tons of coins that are being put on exchanges, and you could day trade it, but it's just I feel like it's hard to monitor investor behavior because still much of crypto, at least in the alt space, is driven by retail investors. But then some of the stuff too is not necessarily just retail investors, but people that are running schemes. So it's like they could be pumping stuff, they could be dumping stuff, and I feel like you have to be an insider for certain things for you to know or get use research to help you make better informed decisions. But if not, you're really just still you're on the roulette wheel. And it really pains me to say that because I don't want that to be true, but I have to be honest. I have to be honest with everybody about that because I feel like there's so many people online lying and making it seem like it's the truth. Don't get me wrong. Like there's always going to be people who can make money. There's always going to be people who can, who figure out a way to do it. But that's like that 0.1%. Like you gotta just be real with yourself. You gotta understand where you are going to be the 0.1% and where other people are not. And majority of people are not the 0.1% when it comes to trading, when it comes to investing. And more people are going to lose than they are going to win, which is why you will never see brokers disappear. They're never going to disappear because they're always going to be prepared to take somebody's money because that is the game. What they always say, you want to be in the gold mine, you want to be the person that's selling shovels, not the person that's digging for it. So with that, that is my content. I'm going to chop this up, put this out on TikTok, put this out in different places, but I just want to just give back. I just feel like there's so many people online that are just lying, misinforming people. And the biggest thing, bro, y'all need to start reading. Read books. And not just, oh, I read The Way of the Turtle. Read other people's stories. Read people that work at these hedge funds, that worked at Goldman Sachs, that work at these different institutes. They make books. They go make talks. They go do things. Go research. Go listen to their talks at universities, their talks with different companies. Go find their books and actually read because history, um, it doesn't. What they say, history doesn't repeat, but it rhymes, and the same things happen over and over and over again, right? Um, it just happens in a different way. And if you read books, if you figure out what's actually going on, it will give you a better opportunity to learn and to be informed about the decisions that you're making, but it also allows you to just skip over some of the BS that you're going to see online. And like the more that I read and then I come back to the internet space and I see the type of content that's being put out, the more I realize how many people are being lied to and being misinformed because of just the lack of information. Most people are only going to learn from just looking at a TikTok instead of looking at real life and um, learning from other people's. other people's mistakes, other people's uh input, right? But you just see the lifestyle, you see the way someone else is living, and you just assume that they did it correct. You assume that they have morals, that they're ethical about what they're doing, and that's not the truth. Like the world that we live in, people don't really care about others as much as they make it seem. They care about themselves, and they will do whatever they can or whatever they have the power to do to get over and help improve their life. They're always going to pick themselves over you. That's just the reality of things. So that's the end of this. I'm gonna chop this up. If you watched this, made it to the end of the video, I appreciate you. I had the Minecraft in the background. For those who are like myself, who sometimes don't want to listen to talking head, but watching this other person play Minecraft or something like that will makes it easier for you to look at. So that's it.